Can I buy real estate using retirement funds? In this video, we're going to talk about how you can use retirement funds to buy real estate. Now, there's a lot of confusion out there and there's a lot of rules on this, so make sure you talk to your financial person before you do any of this stuff. This is going to be kind of a 30,000 foot view on this. Okay, I'm going to show you exactly how you can do that and do it the correct way. This can provide financial independence for your family like you've never seen before, but you have to do it right. Now, stick around to the very end. I got a little bonus for you that can point you in the right direction so you get the right people around you that you can do this correctly. Can you buy real estate using retirement funds? The short answer is absolutely. There are several ways you can do this. You can go to third-party administrators. There's a lot around the United States that say, I want to open up a self-managed retirement account. I want you to be the administrator, and I want to buy real estate with it. They'll say, okay, and they'll set that up. The challenge with that is they're going to charge you fees for every time a transaction goes in there, rent checks go in, and all that other good stuff. You could also set up a self-managed retirement account. That could be an IRA, that could be a 401k. There are many different ways that you can do this. I don't want to get into the types. I want to talk about the concept involved. Now, there is a way where you will be the administrator and you're the trustee. That's the best choice if you qualify to do that. And again, we'll save that for later. To buy real estate in your retirement account is definitely something you can do. One of the biggest fallacies out there is I can't just open up a retirement account and put real estate in it. You can't do that, okay? All the assets that I have in my retirement account have to be bought with retirement money. So I can't go, oh my gosh, I'm gonna make a lot of money on this deal. I don't wanna pay tax on that. Let's put it in the retirement account. Doesn't work that way. All of the rules for retirement accounts, like a 401k, IRA, defined benefit, all of those still apply with this. That's why I'm saying this is a 30,000 foot view. Every single person watching this is gonna have a different scenario for them, which is okay. We can talk about that in other videos and whether that's a great thing or a bad thing or whatever the case is. I'm not gonna worry about that right now. What I'm talking about is the ability to make it happen. So if I have a 401k and I'm the administrator and I'm the trustee, I can go ahead and buy a piece of real estate with my retirement funds, and that piece of real estate is in the name of that retirement account. So as I get rent checks on that, or if I sell that property, all the profits stay within that. Okay, I don't have to pay any taxes on the capital gains in there because it's in the retirement account. Depending on the type of retirement account I have, which could be a Roth or conventional, would determine on when I pay taxes. Again, I'm not gonna give you tax advice on this. I'm just telling you, yes, it is possible and you can make this happen. Now, one of the things I've seen really simplicity thing out there is how do you turbocharge your retirement account when you set it up correctly. And I've got some bonus information, so just hang tight on that one. When you set it up correctly, the best way to make your retirement account go through the ceiling is buying real estate. Okay, if I'm buying distressed pieces of property and I buy it through my retirement account and I fix it up, and I sell that property and make a good profit, that goes into my retirement. Or I buy it, fix it up, rent it out. The value, the appreciation of that goes in the retirement account. The rent checks go in the retirement account. There's all sorts of things that happen. Or if I'm buying property through tax deeds. Okay, so I love buying tax liens, tax deeds. And so let's say I buy a tax deed there. And I say, hey, I want to buy this property from the county and I'm paying $40,000 for this property that's worth $250,000. I need to put about $100,000 into it to make it better. Okay, so now I've got $150,000 in it. It's in my retirement account. It's worth whatever value that is up there. All of those at equity stays within my retirement account. I can rent it out. I can sell it. I can do whatever. And guess what? All that money stays within there. It's just a great way to turbocharge this. I'm kind of opening up a can of worms with that. In the description down below, you can hit a link down there, and I've got some videos and a course on setting up your retirement account correctly, and you can actually schedule an appointment in there. We can actually talk to you direct. Okay, but let's talk about what I just mentioned. I kind of threw some fire on your retirement account. Wait, I can buy properties for $40,000? Absolutely. if I've got my retirement account set up correctly, I can actually go to a tax deed sale at a county. Now, what is that? That's when a property owner has failed to pay off their property taxes, and the county, after 4 or 5 years, says, enough's enough, we need our money. So this is how, I'll give you a case scenario, a case study. I bought a property, I think I paid $27,000 for it. So we'll round it up to $30,000. I paid $30,000 for it. I owned the property free and clear. This person had been delinquent on their property taxes for 4 straight years. They brought it to sale. I bid it up. It needed some work, okay? So I went in there and I put about $78,000 in it, okay? So we'll just round it up to 80. So now I've got $110,000 into this property. It's in my retirement account, and we're selling this property. Our asking price is going to be somewhere between I think it's like $250,000 to $260,000. Not bad, right? So I got myself about $150,000 to $140,000 worth of profit. All of that is contained within my retirement account. This is why I'm such a proponent of having your stuff in your retirement. That's one of the benefits of it. The second thing is, if I'm making money and I'm self-employed and I have my own self-managed retirement account, all of that money that I'm making in my company, I can actually cut a check to reduce my tax liability and make contributions to my retirement account. And again, I'm not going to get into that here because there's so many things that I can get. You hit the link down below. I've got some bonus material I'll get out to you. This is all free. You do what you want with it. If figure it out, set it up, do whatever you need to do on it. You can't find financial independence unless you're managing your retirement account the right way. Okay, period, end of story. And self-managed, in my opinion, is the right way. So again, hit the link down below. There's 2 things I will do for you. I will send you out a total on how to properly set up a retirement account, number 1. And number 2, if you want to set up an appointment with the correct people that talked about your situation, we'll help you out with that also. This is Saen Higgins saying God bless, good luck, and make it happen.